Okay, so I've been testing a couple of strategies and so that we can find basically to show you guys different ways um, of being profitable in Forex, especially for those of us who have more time to spend. Um, so I've been testing an Asia session strategy, and it's an Asia session. I call it Judas Swing. So there are a couple of things I've been testing, but I want to share this one because that's what I'm working on now. And I'm going to be using that for this video just to show you around. Okay, so this is my spreadsheet that I'm using for this back test. And what I'm just looking for is a strategy that can give maybe at least 50% win rate. And I want to use it to demonstrate also trading methodologies and how to build a trading plan. Because your profitability really is not only dependent on how your win rate. Okay. If you have 70% win rate and you have a bad risk structure, you can still lose. But if you have a 50% win rate and you have a good risk to reward structure, you will be profitable. In fact, even with a 40% win rate, if you have a risk structure of 1 to 2, you will still be profitable, and so on. So I'm testing this strategy and it's not easy. It's actually very manual. I'm using a combination of TradingView, you can see that at the right here, and MetaTrader 5, which is my broker platform. And I'm basically logging the date, the trade, whether it's long or short, the entry time, as then I put a specific time. So I use AI as well. So I'm just logging some details that I can feed into AI to ChatGPT or Claude or DeepSeek to do some analysis, and it's pretty cool the things I've been getting. So um I'm going to explain the strategy very quickly and so that we understand what I'm testing. Okay, so let's assume that we have the this is an Asia session strategy, an Asia open rather. It's from 8 a.m. 8 p.m. New York time to 12 midnight New York time. So we're gonna have we're gonna have 8 a.m., 8 p.m. Am I saying a.m.? 8 p.m. New York, and we're gonna have 12 a.m. New York. Okay, so that's midnight. Okay, so whatever we do in this trade is going to fall within this bracket. And if you are in Nigeria, we are about 5 hours ahead of New York time, or 4 hours right now. You can see here. Yeah, we're 5 hours ahead, actually. We are UTC plus one, and the New York time is UTC minus four. So that's 5 hours. Okay, so I'm going to show you some of the complexities of working in Forex market with all these time zones. But you can just set it here, New York time, UTC minus four, you can see the New York time. Okay, so let me show you the strategy very simply. It's just a pattern you observe. Anybody can create a strategy. Once you're able to observe a pattern in the marketplace and see it repeat over time at a particular time frame, right, then you can model your trade after that. And it will not be 100%. It only needs to be right at least 50% of the time. So if you take 10 trades in a month, 50% of the time, five of those trades, if they are wins, you can be profitable. And that's all you need, really. So we're going to talk about other things, how to scale in your profit and how to increase the amount of money you can make. Okay. So let me explain the strategy. Let's assume the market is oh, let me change this one. Let me change this to white, put it here. Okay, so let's work with this. Um, okay. So you have a market that's going this way, this way, this way, this way, this way, this way. Once it's 8 o'clock, once it's 8 o'clock New York time, the first thing you do is that you take a trend line and you mark the most recent high, swing high now. And I'll tell you what the swing high is. You mark the most recent high, and then you mark the most recent low. So this may not be the low, it may be this one. All right. You mark the most recent low before 8 p.m. And this has to be on the 15-minute time frame. So we're looking at the 15-minute time frame. You can see here a 15-minute time frame. When you have done this, if you don't get a sweep, let me use this. So this is moving like this. Okay. You're going to be watching this market until you have something like this, a break of a touch or a sweep of any of these limits, these swing points. So if the market goes below this swing point and comes back in, all right, that our trade is in play. And the whole premise of this is that the Asia session is a very low liquidity session. Okay, low liquidity session, meaning that the market is most likely going to be in a range. So if the market is ranging and it hits the lower limit, it's likely to come back. Can you see it's a probability? It may not come back, but it's a probability that we've seen in the market. So our first, let me write this here. Our first, so this is strategy. For one, um, mark recent swing high and low on 15-minute chart before 8 p.m. New York. That's the first thing. The second step is to look for a let's say touch of either of the either high or low. Okay, that's the next step. So you're here watching, watching. You look for the once it does this, immediately, once one of those points is invalidated, immediately drop down to the 1 hour time frame. Drop down to 1 hour time frame and look for a change. Let me just say drop down to, sorry, 1 minute, not 1 hour. 1 minute time frame for change in structure, or you can call this market structure shift. So I'm going to explain this very quickly. Right? So you drop down to the 1 minute. Let's assume we've dropped down to the 1 minute time frame, and you want to see something like this. This is a market structure shift. A market structure shift is something that you've been having a low here. This is a lower low. By the time you form a higher low, and this swing point is broken, you have a market structure shift. So just watch. You're having this. You broke this down. So this is like a downtrend, but you could have this one coming up and this one comes down like this. All right. This is not a market structure shift because we are still in the downtrend. We're having lower lows and lower highs. But if you have something like this, where you have a lower low and then the price comes back to break the recent high, okay, at this point is where you have a market structure shift. So let's just call it the MSS. Can you see what I'm saying? So we're looking for a break. If it's the lower point that breaks, we're going to have a confirmed downtrend and then let the price reject immediately because we're in a range. We're expecting it to go back up. If it does that at the top, we're expecting it to go back down. So this is a market structure shift. And what we'll be looking for is a retest of this area and then to target 1:2. So wait for retest of support and target 1:2. That is the strategy. Very simple. So first is we mark the point and we will look for a break of either of the high or the low of the 15 minutes, structure before 8 a.m., 8 p.m. And then we look for the market structure shift to the opposite direction. So ideally, the price should come back to this high, ideally, but we don't require you to do that. Okay, all you're looking for is a 1:2 from this point. And your 1:2, I mean, my diagram is not to scale, but at the end of the day, you're going to have something like that. 1:2. So many times your 1:2 will actually line up with this higher, but this is just an example. So very simple. So that's what I've been testing. I will do a strategy video to explain this in detail with some examples, but you will see some of the examples in this video as I go on. But that's what I've been testing, and I test whether it comes in between 8 and 9 or between 9 and 12. Okay, so if I don't see this signature by 9 p.m., if I don't see the signature by 9 p.m., I go back to the 15-minute time frame and I'm watching for the most recent swing high before 9. You get, so the one I did before 8, if I don't see it touching before 9, by 9 o'clock, I'll look for the most recent swing point, high or low before 9. So in this case, let's assume this one is like this. This would be the most recent, and I'm waiting for price to touch it. So that's what I'm tagging. I'm logging here because I want to know if I'm getting more trades between 9 and 12, or I'm getting more trades between 8 and 9. So I can further refine my strategy. So let me go back to the chart. And so I was about to test this 29th of June. So this is 15-minute chart. This is my 8 p.m. This is my 8 p.m. marker. This is 9 p.m. marker. And I believe this is, okay, I have 12, I have midnight. This is midnight. So let's make it like that. Okay, so anything after this point, I'm not taking any trades. So let's drop down to the 1 minute. Now, on my trading view, I cannot go back this far to 29th of June, right? Or can I? Let me see. If I can drop down to the 1 minute. 29th of June, 8. Let's see. Because I'm using the free version. 29th of June. Oh, I can. Awesome, awesome. Sometimes it don't allow you to do like over maybe a week or 2 weeks. So, but this one allowed me. So this is that 8 p.m. I saw in the 15 minutes. Okay, sometimes maybe let me open a second window. Let me open a second window. 29th of June. So we can leave the 15 minutes on this side. So let's leave 15 minutes here. And let's look at the 29. Okay, get the correct part. Okay, so here we are. So, so when it was 8 p.m., I started looking, and you can see immediately at 8 p.m., the candle pierced. This was my recent swing high. The swing high is basically if you have a high point, like this is a low, I have a higher low on both sides. So like a three kind of signature, right? A three candle signature, where the middle one is lower than the two left and right candles. That's a low. That's a swing point. Okay. So the same thing here. This middle candle is higher than this one to the left and this one to the right. So we need the most recent before. Sorry, it is 8 p.m. The most recent before 8. So let's say this is the most recent before 8. I won't take this one because I didn't have a third candle before 8 p.m. So I want a candle before. So if I was to mark, this is the most recent low before 8. This is also the most recent low, a high before 8. But the reason I didn't have that annotated was because you can see price did not even touch. Let me extend it a bit. Price went high, but did not touch. It didn't sweep this. Okay. And it definitely did not come down here. So what I do is when it's 9 o'clock, as I said, and I know that price has not, by the end of this candle, I already know that, okay, we can't sweep either of the two. So I will look for the most recent before 9. That's what I marked with the red line. Okay, so when it's 9 p.m., you can see at the bottom, shows 2100. Um, Immediately price shot downwards. As price crossed this, immediately I'm going down to the 1 minute. I'm going down to 1 minute. So this is on the 1 minute here on the left window here. Um, so this point that it came down, that's what you are seeing right here. Okay, and what am I looking for? I'm looking for a market structure shift. And to find a market structure shift, I'm looking for, there's a high. I want this low that swept this one. I want to see price jerk back up, which is what we are seeing here. Can you see it happened immediately? And I'm going to draw this line. This was the recent swing high. Once price breaks this swing point, I'm going to look for an entry point at a support level. Now, my support levels can be fair value gap, which I can see here. That's why I put my entry there. This is a fair value gap. All right. So once I see this forming, I will put my limit. Once this down candle forms, as it's closing, I would have put my order. This is my order as a buy limit at that point. Put my stops under the recent low. You can see this is the recent low. And I aim for 1 to 2. All right. So, and that's it. Set and forget, and I leave it. I can go to sleep. Whether it hits or not, that's not my business. Okay. But ideally speaking, I look for 1 to 2. This is my stop loss. And you can see how the trade panned out. Um, when you get to 1:1, if I get to 1:1, which is somewhere here, I would move my stop to break even, right? So that even if the trade comes back, I will take some profit and then I'll move it to break even so that at least I pay myself. But that's just the structure of the trade. So the reason for this video was actually to show you to do some of the back tests because I've been doing them in the background. So I was going to do 30th of June, which is the next one. Okay. So this 20, yeah. So this 29th is actually 30th because in Nigeria time, 9 p.m. is about 4 a.m. in Nigeria time. So this is 4 a.m. Nigeria time. So it's one day ahead. Okay, the next day. So the opportunity I got was a long opportunity. So I changed this to long, and it happened after 9 p.m. So this is 9 to 12. What time exactly did I take the trade? I'm gonna take this times 9:13. So 9:13. Was it a win? Yes, it was a win. Oh, okay, that should be populated by itself. So I have some formulas in this sheet. I'll just take the final R closed, which is 2. That means I hit the win I hit my TP2. So I'm going to put that here. TP2. And my other ones should populate. So I also try to mark the highest R reached, meaning that, okay, if I had left this trade, where would I have reached before the price collapsed? So I can actually measure that maybe it got to, and it did actually get to the swing high point, which is this red line. So if I had actually left this trade, wow, if I'd left this trade, I would have opened up the next morning to see it. Okay, so let's assume this, if I was trailing my stop, I would have been stopped out. If I was trailing my stop, I would have been stopped out here, actually. highest I reached was 4.81. So this is just for analysis purpose. Okay. So that's for 30th June. Let me keep doing, you guys will understand as I go. So I'm going to go to the next day. So which is 30th June for New York, but in Nigeria, it's yeah. So let me move this one as well to 30th New York time. So what I do is I mark 8 p.m. I mark 9 p.m. I mark I mark midnight. I mark midnight. Okay. Then I want to mark the recent high. So you can see I'm tracing backwards. I'm looking for the first candle that has a lower high on both sides, which is this one. So I'll take this. What's the low? It's not this, it's this one. You take this. So definitely price spiked and swept this high. So I'm dropping down to 1 minute of this side, and this is where price swept it. Yeah. So at this point now, I'm looking for what? A market structure shift on the 1 minute. So these are 1 minute candles. And I'm looking for this kind of signature, something like this. And to come and break this one. That's what I'm looking for. Something like this. So I'm seeing this. 1, 2, 3, 4. That's what I'm looking for. 1, 2, 3. I see this. A sharp break below the low, recent low, leaving behind ideally a fair value gap. Okay, this is a fair value gap. Whenever I say large displacement candle, that gap between the low of the previous and the high of the next one is a fair value gap. So anywhere between in this middle, I want to take my entry. Okay. Some of you, if you are conservative, you put your stop right here on this line. Put your sell on this line, like that. But you can see that if I did that, my stops goes to this place, and I look for 1 to 2. My risk is quite high. To get 1 to 2, I will need a large displacement lower, even though it will still bring me back here. That could still work. Let's see if it would have worked out. Okay, see, it wouldn't have worked out. You would have been stopped out at your partial. But what I would have, because of this large displacement that I'm seeing here, hmm, my entry would actually have been in the middle of this fair value, at least as a minimum. Okay, some of you that understand other blocks, you could actually take this one, it's another block, or take this one, it's another block. This would have been your tightest entry. Okay, well, let's just assume that I was a bit conservative. Sometimes price will not always come back. So you need to understand all this, what they call PDR rates. So I'm speaking ICT language now. Okay, so the stop goes above here, and then I go for 1 to 2. 1 to 2. So let's say 1 to 2. This is where I see the tighter the risk is, the tighter your entry is, the easier it is in terms of risk management. So my trade would have closed out 1 to 2 here. Okay, when it got to 1 to 1, which was here, in just one, okay, no, what am I doing? This is where the trade would have entered right here. Okay, so when this happened, went down, I would have put my trade here, and you can see it went up, it came back to, yes, 1 to 1. So this is where you would have moved. At this point, you would have moved your stops to break even, like that. Okay, and then seeing if it's going back to, which it did. Actually did go to 1 to 2 in just a few candles. So this was a win trade. Okay, so there are different ways you can do your entries. Some of you will take this. If you are taking this, you would have gotten 1 to 1 and you'd have been stopped out at break even. But if you had waited because of this large displacement, you would have gotten 1 to 2. See, so let's go back to my spreadsheet. So I'll copy this row and text it. So this is 1st of July, 5. It was a short and the trade was taken at 9:45. So that's between 9 to 12. So 21, 5. What was the highest R rate? So let's say it was 2.52. Highest R rate 2.52. And yes, so can you see this was another win? Okay, let's go to them. So I'm going to be faster now. I'm going to Tuesday. Okay, so Tuesday, let's do 8, 9. I just like to do things down so that I don't have to think about them later on. Okay, so this is 8. Before 8, you would have come to check the most recent high, which is here. Most recent low, it can't be this one, can't be this, it is this one. Okay, but this one was swept. You can see this one was already touched, so we can't use that. It has to be the most recent low that has not been touched before 8. So that it will be this one. But in any case, the price still swept it, right, at 8 o'clock. So that's what you are seeing here. So when this price swept it, we dropped down to 1 minute. But you can see price just displaced up and we didn't get any opportunity for a market structure shift, a clear market structure shift. Price just jumped higher. No problem. This is still within 8 o'clock, but it has gone up to the next target. It has gone back to the high of the range and swept that. And also here, you didn't have any valid market structure shift to say you want to come back. So let's look at 9. Let's look at the highest point before 9, which is this one. Lowest point before 9 would be this one. Yeah. So let's look. After 9, this one swept. This candle swept its price. So it's 9 o'clock and 1 minute. Yeah. So this is where price swept it. So once price, you can say this is a very rule-based approach and mechanical. So it's easy for you guys that are just looking for something consistent to make money in the market. The only thing about this strategy is that you have to wake up and you have to wake up at 1 a.m. Nigeria time. So 8 is 8 p.m. is actually 1 a.m. Nigeria time. So you have to be up. And you can use alarms, but we'll talk about that later. So once it swept this point, we're looking for a market structure shift. We're looking for something like this. We're looking for something like this. Bam, bam. Once we get it, break the lower high, low and break the previous high, that's the market structure shift. Okay, so this one did not break, still going down, still going down. So let me just be drawing it. So we are having all these quite swings. We have a displacement low, we have a displacement high, it didn't break this one. So we have displacement low again. We could have worked, but it did not break this one. It just came. So you can see price is just ranging, and it's doing that. We did not have a clear market structure shift. So the place we can say we even had was here, but I may not have taken this, just to be honest. I want a sharp displacement. So you can see, uh, so you can see this. Let's assume, okay, let me So let's say we have this, yeah. I won't even count this as a valid market structure sheet. This is the market structure sheet, but then it took so long to do that, you know. And where will I put my entry? Where will my stop be? So there won't have been any trade this day. Yeah, no trade on 1st of July. No trade. 1st of July. No trade. Uh, no trade. Okay. So 2nd July. Let's say 245. Now, okay. So let's look at 2nd of July, which is going to be, I hope I've not messed up the coming one. No trade. 2nd of July. Okay, that's correct. So 2nd of July, here, 15 minutes. This 1, 2, 3, 4, 9. Okay. Recent high is here. This will be the most recent. I think it should be this one. Should be that one. Yeah. That's the most recent low before 8. So immediately, let's go there. This one. So immediately it opened, price broke down. And so we're looking for market structure shift on the 1 hour. Um, 1, 2, 3, 4. Okay, this would have been a market structure shift. You see, it went up, went down. It broke the low, this low. It broke the high, but I'm looking for a close. I don't want a sweep because this is a fake out. Okay, it's a fake out. So I'm looking for because if I had entered here now, my stop would have been right here and it would have swept me again here. So um okay, so I would not say if this is a clear break. It just touched. But technically, let me look at the low. This low is 334189. This low is 334185. Okay, so this is lower than this, technically. But you can see visually it's about the same. If we were to take it technically, by the time this place broke, so we have something going like this. We have this going on. That's the market structure shift. By the time it broke this high, the market structure shift, we'll be looking for entries in this place. So fair value gaps. But yeah, I don't like this pattern. See it? Fair value gaps here. One. Somebody you can look at maybe 50% of the range and say, okay, I'm going to take a fair value gap that is under 50% of the range. This one, under 50% of this range. All right. So if I was to do that, but I don't like this, I would probably not be taking this trade. If I had taken on that fair value gap, somebody could actually come and say he was going to take his entry on this order block right here. Yeah, he won't have been tagged in. But if you are taking it on this fair value gap, so fair value gap seems to be working, put it under recent low and the target 1 to 2. So this is where your trade would have tagged in right here. So you can see the strategy. I don't need a very tight one. I would be very skeptical about this, but technically it actually broke through. So for purpose of backtest, um, yeah, for purposes of backtest, because of this swing, yeah, let's log it for purposes of backtest. Let's log it. So second July 5. So this is the buy. So you can see I'm having more trades after 9 p.m. actually. This one took place at, I was tagged in at 9:50, so 21:50. And highest R reached was 2.78, 2.78. Oh, where are all these values? 2.78. So, but it would have closed out at 2. Okay. Um, so that's that. Let's go to third. So you can see how this strategy works. Very mechanical. If you do it for 10 times, you get the idea. So first mark out 8 p.m., mark out 9. Even if this was live, I would mark out these points in future so that when I get there, I will know. And sometimes if you don't mark out this 12, you may just be looking for trades, and you will forget that you have passed the period. So recent high, which one is high? Let's look at the high, 333.1.9, 333.1.95. Okay, so this higher. Okay, recent low is this. So we did not tag either low or high before 9. So I would come to the recent. I can't even use that as recent high. Recent low, I would have used this recent low. So it did not tag recent low, but this recent high will still be valid for 9 o'clock. Okay. So at 9 o'clock, we came and tagged this. The 1 minute, I would be looking for market structure shift. I did not get anything indication of that. The market just collapsed, basically, just collapsed. And price did not come back to the recent low before 9. It did not. If I had used this low, it would have tagged it here. Okay, it would have tagged it here. And maybe you could have taken this. Yeah, but no, it's not even working. So this is how we build. I won't have taken that trade anyway because it didn't tag this. There's nothing to say that it won't just go up and collapse again on you. But you can see what we missed. And that's gonna happen sometimes. That's gonna happen. So, but we don't care about that. So no trade um on this day. No trade. No trade. So 3rd of July. 3rd July. No trade. Okay, 4th July. So I'm just gonna do it all the way up to today and then I'll do the analysis. 4th July. Let's go to is it 4th or 3rd? 4th July. 4th July. Okay, it's 8 p.m. 8, 9 p.m. 12. Yes, recent high, recent low before 8. Can't see it. I think this one was tagged. Was it? Okay, that's actually the recent low before 8. So when it was 8 o'clock, it was tagged immediately right here. And once it was tagged, we start looking for the market structure shift. We have this, we have this, we have this, and we have bam. Good. So even though this was not energetic, but I think I would still have taken it. We have this, come here, we have this. Would I have considered, I think I would have considered this, yes, as a market structure shift. Really, I don't want to see this. I don't really want to see this. What I actually want to see is this immediately. This leg should have gone up. But I would have still taken this, honestly, as okay. So the moment this thing broke, the moment this thing broke, this candle broke here, I would have looked for the fair value gap. So there's one here, there's another one here. You can see there's another one here. So fair value gaps. Okay. So, and you can see this is about 50% of this run. So I will put my stops below recent low right there. I'll target 1 to 2. This did not go to, did it? Almost got to 1 to 2. Yes, 1.7. Actually went to 1.7. Okay, but it didn't get to 1 to 2. So what would have happened is once it got to 1 to 1, I would have taken the stop to break even. So 4th of July long, what time? This one was 8:14. So this was between. Highest R was what? 1.74. But I closed at 1. No, I closed at breaking. Closed at breaking, not 1. So I would have taken partial at 1, and it would have stopped me at here in profit in break even right here. Okay, so far so good. Can you see how the trade is going? So okay, no trade on Saturday. Sunday night. Sunday night is next. I think I've done some tests here already. I was just following it. So this is Sunday night, which for us will be Monday morning by 1 a.m. Nigeria time. So before 8, ah, oh, oh my God. What did I just do? Okay, the 4th is a Friday. 4th is Friday. Okay, okay, so that my date should be, my date is wrong. 1, 2, 3, 4. Coming 4th of July. Okay, there won't be a trade on 4th of July because the next trade is Sunday. But I did first. Uh-oh. 30th of June. Yes. First, second, third, fourth. Let me go back to fourth and see what happened. Okay, that fourth is actually yeah, no trade on the fourth actually. No trade on the fourth because once market closes by 5, it opens on Sunday with this gap. So this should be sixth. Ah, yeah, it's sixth. So mm, okay, so this should be 6th of July. So let's go back. So 8. So price swept the low immediately. Where are we? Right here. Price swept the low. Immediately we're looking for market structure shift. Bam, 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 bam. Boom, we have it. Oh, that was the trade I just logged now. Okay. I think we're done with this. We need to move to the next day. We need to move to the next day, which would be 7th. The 7th. It's making sense. This is 8 o'clock, 9, 12. So you see, we have a low here, but it was swept before 9. The next low that we have is right there. You see this? But we didn't have any touch of this or this between 8 and 9. So when it's 9, we need to update our highest and lowest point. So this would have been our lowest point before 9. And I think this should have been our highest point before 9. So by 9, the market opened here and swept this low. So we are going to 9 o'clock, swept this low, and we are looking for that signature, which I can see beautifully. Came down here, swing high, right? Swept this low again. So this is what I'm looking for. 1, 2, break this low, and then break the high. Can you see that? So we're going to look for an entry in this leg. And see if I ever look up here, which is not a bad entry. I just want to make sure that my entry is in the lower half of this range. If I draw a fib here from this high to this low, I want my entry to be in the lower half. Can you see it? So I use my eye to get that, yes, lower high. Somebody else could say, I want the best entry. I want this second favor. Look at it will still have tagged you in. For my other block, guys, other block could have been this one. Or if you want a tighter one, this one. Any of them would have entered. So if you're using all these very, very tight entries, you will get less trades, but you will get more accurate trades. Because if you're using this kind of other block entries, you're getting probably 1 to 3 minimum. Minimum, right? So you see, I'll teach you guys all those entries. So the trade would have actually been, if you were even framing that this is equal highs, this is this is 2.6, right? But the trade actually went as high as almost 1 to 4. Actually went as high as 1 to 4. You see, that's if I using that, but I won't have used that, honestly. I want more trades. So I would have used this one. Okay. But normally I will use this or this second one. But I think I would have used that one, to be honest. Because sometimes price will just target and run away. Or best still, I will use half. If I saw there are 2, I would assume that price will definitely come to the half point. All right. The other thing you can look at is that my market structure shift happened here. The strongest entries are actually below the market structure shift. It's probably where I would have happened, to be honest. If you are taking something above here, you want a retest of something in this leg. Is it in this leg? My 1 to 2 would have actually been here, right there. When it was 1 to 1, I would have taken profit and moved my stop to break even. The thing would have come down here. Can you see if I move my stop to that one, it would have flagged me out. But break even, so it can have room to breathe and still go back. So my highest R is actually here. What's this? 3.09. That's my highest R. But I would have taken my profit at 2. That's enough for me, at least for this test. But I'm going to log that long 9 trade entered at when did the trade enter? Right here, 9:18. Highest R was 3.08. Closed at 2. Closed at yeah, closed at 2. Okay, so that is the 7th of July. I have 2 more days. 2 more days. Okay, so we have 2 more to go. Let's go to Tuesday, 8th. Let's even check whether we have a trade before we start going to 1 minute. Um, can you see that this strategy is very, very profitable? Like the win rate is like probably 80%, something like that. So you just need to manage your risk and be patient and be able to wake up at this time. Honestly, I'm really, really considering it. But for those of you who have the time, fine. So let's look for the swing high before 8. That's clearly the one we're going to use. This is swing low before 8. So it opened at 8. Boom. So let's jump to 1 minute and the 8th. Immediately it opened, it paired. Usually love these kinds, but I don't see the follow through. I don't see the market structure shift here. It's not clear at all, right? It's not clear at all. So I would leave that till 9. And so once I see something like this happening, I'll just put my mind on 9 o'clock. I'll go back to 15-minute chart and be watching. Okay. So this will not be the highest point, but I can't see whether, yeah, so price never touched this. See, it never came back there. This low was still active, was still valid. So price did not touch this high, but it came back to this low at 10:30. So you would have had to be up till 10:30 before it swept this low. And now we'll be looking for that market structure shift. So we have something close here, 1, 2, 3, but I don't have the fourth leg that's supposed to sweep this one. Price stop there and starts doing this. I will not take this as a market structure shift. This one, this is just a sweep. I need a body close above this line to take it seriously, right? So we do have the body close. Yeah, so you see, this is even now messy. So let's assume, yeah, I won't be taking this trade anyway. It's too range. There's nothing that says the price would have done this and just collapsed or won't have collapsed. Okay, so let's do hindsight trading. So I won't have taken any trade. In fact, as at this point, we're already at 12 o'clock. Can you see? So by the time price will come down into maybe a fair value gap here, or which fair value gap do you want to take now? You see, and we're already having sell side targets. So this would have been very risky. I wouldn't have even taken it because this is the leg that should have broken. If this leg broke, yeah, I would have entered. Okay, so there won't have been any trade on this day. So Wednesday, oh, Wednesday. I've missed a weekend. Or which weekend was that? 30th, first, second, weekend. So weekend of before 7th. Okay, here. Yeah, weekend. Okay. So we go to, so no trade on this one this day. No trade. It's not relevant. No trade. So the last one is 9th. It's 9th of July. Yeah, backtest takes time. It's fun for me. Oh, today is 9. Yeah, so we have not even reached. Okay, so that's last day. Yesterday was 8th. Yeah. So I keep testing all these strategies. Let's just stop there. Okay. So here's what I would do. See, so I tested the whole of June. So this is like 1 week, 2, 3, 4, 5. This is like 5.5 weeks of trading information. And what I would do is I will now take this into um let's use Claude. I know Claude used to fall my hand because but anyway, before I do the AI, maybe I'll do the AI in another video. Okay, so let's say comments. Sometimes I put comments. So like no trade Y. No trade Y. I'll say no didn't no setup before midnight, which is my session time. Right? So anytime there's like no trade, um 3rd of July, why? You know, no trade, no trade, no trade, no trade. So those are extra comments that if I'm doing analysis, but I'm not going to put this ones for now, I can go back later. Okay, so I just wanted to share my process of backtest with you so that you can see how we develop strategies. But if we were to look at the wins now, I did some formulas to, are you kidding me? Just one, okay, two losses. I put some formulas to let me know how many wins and how many losses. Wow. Out of how many trades? Okay, so wow, 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 wow. This is crazy. So let me do this. Let me copy this and go to Claude. Okay, and say this is my backtest information building strategy. So let me go here, copy that. No, it should be on this one. Yeah. So copy this. Let's go to Claude. My strategy. Yeah, let's say strategy. Yeah. Mark recent low before. So Asian session, Judas Swing strategy. Okay. Look for touch. Look for sweep. Look for break. Let's say break of either high or low swing points before it PM. No, or low. Let's for low swing. Either let's say previously marked. Drop down the one time frame. Look for change structure, market structure shift. Wait for a test of support. So basically, enter on FVG and target 1 to 2. 6. This is trade management. Once trade gets to 1-to-1, move stops to break even, and take 30% partial. Okay, so that's my trade management. If no trade setup for 9 p.m., then then go back to step 1 using 9 p.m. as marker. That is mark recent swing high and low 15 minutes before 9 p.m. Okay, so I think that's clear. I want you to analyze this backtest results to give me your thoughts. Let's put it that way. Oh, this functionality is which functionality? Looking at your Asian Judas Swing analysis, win rate, you have a strong win rate, 83%. Crazy. I mean, there's some trades I may not have even taken, but let's even say, wow, 19 wins. When I'm talking about the losses now, we only lost twice, which is excellent. Hold on. How did it get to 18 wins out of 26? So what about the no trades? Okay, let me see so this is how I use AI. Um, Risk rewarder, yes. Risk management, good risk management with most winning trades hitting your 1 to 2 TP. This is crucial. You see, key observations: time frame. Your time frame adapts well to the extended window, giving you more opportunities since you implemented the 9 p.m. reset rule here. That's called 9 p.m. reset rule. So when I'm doing my course, I'll call it 9 p.m. reset rule. All right, this flexibility appears to be working well. Market direction, you're successfully trading both long and short setups, which shows the strategy isn't biased. No, it's not. It's a range trading strategy. Trade management, your one-to-one break-even rule with 30% partial is working well. I noticed several break-even closes that protected your capital when trades reversed, which is exactly what good risk management should do. So I'm sure you guys understand that. The trades where I said, let's see that last trade. I think last trade was on Monday. So this particular trade, but this one hit 1 to 2 anyway. This one hit 1 to 2. Which trade did not hit 1 to 2? Break even. 6th of July. So this one. So this one did not hit 1 to 2. Yeah, it stopped at 1.74. So when when this trade got here to 1-to-1, I would have done this. Move this stop. So that by the time the trade came back on this candle here, right here, I would have stopped that at break even. If not, it will just come back and take me out. So that's the advantage of this management. If not, this would have been losses. Can you see that? I would have had 1, 2, 3, 4. 4 losses additional because this one did not get to my 1 to 2. Awesome, 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 awesome. All right, what else? Um, yes. Areas of concern, late entry times. Many of your winning trades are entering very late in the session. Yes, 10 to 11. While profitable, this leaves little room for the trade to develop if you are strictly ending at midnight. Well, late on late entry comment. It's not that I close the trades. It's not that I must close the trades at midnight. I just won't enter new trades after midnight. So I can still take trades at 11:59 and let them run and manage them. It's within what's allowed in my trading plan. Okay. Consecutive loss. You have some losing streaks like late June that could be psychologically challenging. Consider if market conditions changed. Losing streaks late June. Let's see. Late June. Where are losing streaks? I don't see any. I don't see any losing streaks. Maybe it's hallucinating. Also, I didn't see any losing streaks in late June, as you said. Check. Yes, I'm lazy when I'm typing to ChatGPT, to AI. Missing set of several no trade days due to no set of development suggests you might benefit from extending your session or more flexible with your criteria. No, I don't want to do that. Because if I'm more flexible, then there will be more losses. Consider extending your session if 1 to 2 targets are being reached after they're not. Document market conditions on winning. So trending versus ranging. I know its share session is ranging. That's part of the conditions for this strategy. Review your market structure, shift criteria. Yes. Yes. So right now I'm still, but generally know what I'm looking for. A fair value gap below 50% of the range. So yeah, these are the reasons we test. But right now I'm very happy with the result. I don't even want to change it. Consider a third time reset, maybe 11 p.m. for the latest session if you are consistently seeing setups develop after the 9 p.m. reset. Hmm. Okay, so what he's saying is that okay, like which day was that? 8. So on this day, it's 9. So on this particular day now, he's saying that this I know I didn't take this trade. No, I don't think I would have done that. So let's assume I wanted to take you said 11. I put another time marker at 11 and I mark the high and low before 11. This should be the high. This should be, yeah, there's no low. That low be the next one. Oh boy, it's a block. The next low would have been, let me use a ray. Have been this one. Okay, yeah, I'll go. Yeah. Mm, yeah, well, I still wouldn't have gotten a setup. So my low would have been here. It wouldn't have. I don't know. This one works for now, at least based on my test, and I'm not even sure I want to be. I'm even trying to rule out maybe if I have 8 to 9, 9 to 10, maybe by 10, by 11, maybe I should even stop all my trades by 11 itself too. Because I mean, man has to sleep. So, guys, this is my. Let me give you this comment and see what he wants to say. Okay, yeah. So, you see, sometimes AI hallucinates. You have to know what you're doing. Since you can let it run past midnight and establish, these loot entries are actually perfectly fine and show good patience. Leading performance, I apologize for the error. Looking at leading again, win, win, no trade, win. You're correct. There is no losing streak. You have 3 wins. Okay. So with the timing clarification, your strategy looks even stronger. Patience pays off. Your willingness to wait for proper setups, even late in session, clearly working well since you can manage trades. After performance, looking more carefully, your only real consecutive losses appear to be minimal and you bounce back. That's what we want to see. So this is a very strong strategy. It's just that the timing. All right. And you give me a trade performance analysis with best practices, so profitability, uh, risk, etc. Yes. So start rate 23, win rate 82.6, man. Performance period, yes. Asian Judas Swing. My total return 34R. So that means if I was risking 1% of my account, I will make 34% in this period. Crazy. Average win is 2.24R. Average loss is even not up to 1R. Profit factor is 6. Expectancy is 1.48 per trade. That is really good. That is really good. Really, really good. So, yeah, 100% of trades hit TP1, 73% hit TP2, and 26 remaining was breaking. Risk management, yes. Risk per trade is 1R, yeah. Risk adjusted return is 34. Okay. Largest drawdown, yes. No significant drawdown. Now, this is the downside of our ATMA um hedging strategy is the drawdown, and it actually it messes up with a lot of people. So that's also why I'm looking for another strategy that we can use as a community and it can be easy for new people to follow. Quick recovery, all losses followed by immediate wins. Reward distribution 60%, blah blah blah. Okay. Consistency, average trades per week is 3 to 4. So you're taking about 3 to 4 trades a week, which is good. Win rate consistency is above 80%. Setup quality 23 executed. Selectivity 62% of trades taken. That's good. No trade days, 14 days. So there are 14 days where we did not take trades in the month. So he did a comparison. My strategy is 82%. Typical day trading, can you see 45 to 55? And these ones are still making money. So imagine how much you are making. Professional standard is 60 to 70%. My profit factor is still higher. Risk to reward is that. Expectancy, awesome. Okay. So confidence level. So we can go with this. So can you, this is an institutional quality strategy. Awesome. That significantly outperforms retail trading approach. High win rate, good risk reward, disciplined execution. Continue with the current approach while you gradually increase your sample size to further validate. So yeah, that's why I keep testing this. I've tested this before, but I'm going to do this for over 90 days. I'll be tracking this spreadsheet for 3 months so that after 90 days, we can have an authoritative, um, back test result that the community can work with. So I'm glad to open this up to you guys, and that's why I'm even showing you this. Can you um can you detail a strategy so that I can easily send this to my trading community? I want step by step. I'll make sure to cover all ends, including risk, trade, management, setups, timing. Oh, there was something I wanted to do. No, let me keep this. I wanted to ask, assume I'm trading with $100,000 capital and risking 1% trade. Do a do a simulation of my trading performance. I'm going to keep this for another video. Okay, so let's just do this one. I don't want to waste time. Okay, so strategy overview. Crazy, crazy. So this is step by step. So I'm going to post it in the group. Okay. So yes, switch to 15-minute time frame. I'm dealing with Nigerians, so you must let them know to set their time frame to real time for this, or or see how to convert the time frames to Nigeria time to be 18. Yeah, it's saying I don't think there's a New York. I don't think there's New York time version of MT5 any essence. Okay, many of them are using MT5 on their phones. Just revert to what we had before, but let them be mindful of the time zone and at it when trading. For instance, on MT4, 8 p.m. New York is equivalent to 1 to 3 a.m. Nigeria time, while it is 4 a.m. on 85. Right. Yeah, so it's going to correct that and just add it. But anyway, I just wanted to look at the so this is sometimes how I have fun. Do all this analysis and I look at it. Okay, submitted the strategy. So mark key level switch to 15-minute time frame. Identify and mark the most recent swing high and swing low before 8 p.m. EST. Yes. These levels become your liquidity zones to watch for breaks. Awesome. Set alerts for breaks. Yes. So you can actually set an alert on trading view. So you can, like, when I draw this line, like this one here, you can click it here, or you can right click and add an alert on the trend line. Okay, you see? So that when price crosses it, now I already have a lot of alerts, so it's not allowing, but you can do that. So when the price crosses that, so you can at 8 o'clock draw your listing and go and sleep actually, or rest or do something else. You don't have to watch the chart. By the time price touches it, like here, you can set an alarm for 9 on your phone normally, or put an alert on this your 9 p.m. as well, so that if price touches it, it will alert you. Or if price touches one of these, it will alert you. So that's what it's saying. Set alert for break. Prepare a 1 minute chart for execution. So at this time, your empty phone on your phone or on your laptop if you're using desktop version. Know your risk management, know what your so I'm going to do live trading actually, so we can know how to even calculate our lot sizes and all that. Wait for swing break. Okay. Switch to 1 minute. Once the break occurs, look for market structure shift. Wait for retest. Look for FVG formation and entry. Yes. Use precise test stop loss below is above or below swing point that was broken, and set your targets. Fallback protocol. So the 9 p.m. reset. Awesome. Awesome. So look at the checklist. We're gonna have a lot of fun with this one. So I hope you guys start making money, because I don't think it can be simpler than this. Um, and I'm going to experiment with partial prof. So there will be a part 2 of this video where I will look at simulations of, okay, what if I went for 1 to 3? What if I took 50% partial? Which one will make me more money? Okay, timing. Great. So let's stop there. So I'm going to post this in the group, but I'll show you guys. There will be a new room for this, I believe. All right, so we're going to keep doing this, these trading videos, and I'll start doing more. This was a backtest video just to show you how I come up with these strategies and I test them. and also how I use AI to do these tests. So I'm going to do the simulation that will show the how much you would have made, right? And then I will see you on the next one. Happy trading. God bless.